Hello, Crypto World. Tuesday, midday in the United States, and it's already Wednesday in Asia. And Crypto Land, yes, we can go up. Look at this, across the board. Crypto is green. Now, we all know the explanation for the sell-off is related to the fact that many people believe there's not going to be a rate cut in December. And you see there's a debate about whether the AI stock upward rally and the Magnificent Seven rally is overdone. So everything else back down, so crypto back down. But now crypto is going up today, and I described my belief why this was likely to happen yesterday, simply because we have NVIDIA reporting its earnings after the close on Wednesday. And should that be a positive response to their earnings, we will see all technology stocks rally up, and in particular, crypto will gather steam. So I personally believe many people covered their shorts. But I want to talk about something that's really remarkable. Morgan Stanley has come out and been very specific about how much Bitcoin one should own in one's portfolio, number one. Now, this is Morgan Stanley's recommendation, depending on what type of investor one is, what their customers should have Bitcoin in their portfolio. They say you have up to 4% of your portfolio if you're in opportunistic growth, 3% if you're into market growth, 2% if you're just looking for balanced growth, and 0% if you're a conservative investor. I only bring this up because this shows you what major financial firms are saying about crypto. And while we would like them to own a greater percentage, the fact that they are describing what type of investor should hold what percentage is, at the end of the day, in my view, positive for crypto. And Morgan Stanley did something else. Despite this sell-off, Morgan Stanley sold $104 million worth of a Bitcoin complex instrument, and it's the largest one of its kind, and it's being sold, obviously, to the Morgan Stanley clients. And what this complex instrument does, this instrument is tied to the BlackRock ETF, IBIT. And if IBIT, which reflects Bitcoin's price, in the first year is up or unchanged, then the deal is over and they hand you back your initial investment plus 28%. However, but on the other side, if Bitcoin is more than 25% off of the price when you entered at maturity, then you suffer the dollar amount that is greater than 25% in a reduction in your investment capital. So many people describe this as a safer way, if you will, of investing in Bitcoin. But for me, it exposes you to the volatility side on the downside, but if it goes up significantly, you're limited at 28%. But meanwhile, they sold $104 million of this. Bottom line, I want to be very clear. In my opinion, not financial advice, this rally now is simply because the big event is coming with respect to NVIDIA earnings, and that can influence the markets, and crypto will be influenced. So people who are short are covering their shorts, and they're not adding to short, and some people are buying in anticipation of positive news. But I don't think this represents the end of this sell-off unless we get confirmation that they're going to lower interest rates in December, which is clearly debatable, and we need a rally in tech stocks for this to continue. But, of course, we're very happy to see it today, and I hope I'm wrong. I hope it just keeps going up.